asked my TA to keep record that whether you are responding or not. Okay, so that it is not possible to evaluate, as I said, all of you in a single class. But whoever will respond, the right or wrong answer is not what I am expecting, but depending on your response, I can at least understand that you have attempted, you are trying, and if it is not clear to you, so that I can repeat. So try to respond, and you will be, the class participation marks, as I told, that will be based on these responses only. And whoever will respond, I will consider it as your group is responding. Okay, so that's why I have given the groups at the very beginning, so that you have a clear idea who are in the groups, and you will try to participate accordingly. Okay. So yesterday I have given you a few items, and you have told me that what those items are, under which head they will fall, and what are the reasons behind that. So that I will continue first, few more items, and then I will go to the transactions, how to record the transactions. Okay. So yes, let me continue with yesterday's thing. So inventory. So who wants to answer? Raise your hand. Okay, all of you, please raise your hand. Yeah. So first is inventory. Abhijit, tell
Ma'am,
me.
asset.
Yeah, asset. So it is a very good thing. Abhijit, yesterday also he tried, but he was not. It was not correct. The answer he has given, but at least he tried. So I will expect that he will try. So Abhijit, what kind of asset it is?
Fixed asset.
No, it is not fixed asset. What is fixed asset, Abhijit?
It is property or equipment.
Yes, so equipment or property, which, so what is the nature of fixed asset? Tell me.
It is a long term.
Long-term asset. So which is we are going to, invest in a fixed asset, which will give us the benefit over a long period of time. That is not going to be expensed within a single accounting period. That is what fixed asset means. Okay. Now, when I say inventory, what is the purpose of inventory? So just remember one thing, this is for everyone. So this concept of asset also varies. For example, we know that property, your what it is called furniture, computer, these are your fixed assets, right? Because it is not that you are going to get the benefit of it only for a particular single accounting period, whatever it is, machinery, furniture, your computer, and etc. So it is giving you a long-term benefit. Okay. Now if you know that, say for example, computer. So if it is a computer manufacturer and computer is there in your asset as inventory, so what is that? Is it a fixed asset? Who will answer? Saurav, you tell us.
Ma'am, can you repeat the question?
Say for example, computer is a fixed asset, we know, right? So for a computer manufacturer, we count it as inventory, because we are going to sell this computer. This is the business, right? The selling of computer.
Yes.
So now that's why it is coming under inventory. So now what is computer? Is it an asset? Is it a fixed asset?
No, ma'am, it is not fixed asset,
No. So
because
that's why I'm asking, what is that?
short-term asset,
Why so?
because in future we are going to sell it.
Yes,
So
and also I just yesterday discussed about 3 activities. Can you tell me, Shorav? You were there yesterday?
Yes, ma'am, I was there.
So what are the three activities I told that, I mean, beyond that, there are no activities, I mean, that happen in a business. What are the three activities?
Revenue.
No. Activities. In the cash flow statement, what we get, I told, na? Say, for example, investing activity. So one is the invest decisions, say. Investment decisions. What are the three decisions? Investment decision, operating decision, and what else? Anyone? Anyone?
Financing, ma'am.
Financing decision. Okay. So now, when you are not a computer manufacturer, but you are using computer, okay, as your fixed asset, which is going to stay with you for a long period of time, so then it is your fixed asset, and this will come under your investment activity. But when you are the manufacturer of a computer, the operation is related to computer only, your whole operation. So then it is not a fixed asset. It is not an investment activity. What it is your operating activity. It will come under your operating activity. Okay? You are going to produce the computer, you are producing the computer, you are selling the computer. So this is the operation. So this is no more your investment activity. Understood? So inventory, when it is inventory, so it is not that inventory will keep for long 5 or 10 years with you. It is not meant for that. It is you are producing, you are keeping it, and then you are again selling. You are buying the materials, you are producing, keeping, and then you are selling. So it is an operation, it is a continuous process. So this is your short term asset. Okay, so you got it, Abhijit?
Yes, ma'am.
Then accounts receivable. Okay, Shanmukha.
Yes, ma'am. Version. It will be a short-term asset because like it is created when company lets a buyer purchase their goods on credit. So it will be a short-term asset.
Short-term asset, right? Because I have already delivered the goods or service, whatever, but I am yet to collect the money. So it is an asset. I have an ownership over the money. So this is an asset. Okay. Then land. Let me ask, Aditya has answered many times. Rajat, I have not seen his name before. Rajat, you please answer. What is land?
Long-term asset
Long-term
because
asset.
it's
Yes.
expected to be used for more than 1 year by the company. So
Yeah, good. So can you tell me, Rajat, I mean, one feature of long-term asset and one feature of land which does not match with long-term assets feature? I have told it in the class.
I'm not sure, but like I'm not sure. Like
You are not sure. Okay, no issues. Then Charvi, can you tell me one feature of land? It is termed as long-term asset, but it does not match with other fixed assets. Why so? In what respect? One
It's
difference.
not a fixed asset because maybe uh, maybe we don't use it for that long.
No, it is fixed asset. I mean, Rajat is correct. I mean, it is fixed asset. I am just asking that one particular feature of land which does not match, I mean, with other fixed assets. What is it?
I
And
don't
that's,
even.
yeah. Okay, so I mean, just raise your hand. Who knows? I mean, who understand? I mean, what I am trying to say. Just Saniam, you have answered. You have, answered many a time. Shreyash, you please answer.
Uh, Ma'am, it is a fixed asset, but it does not have a depreciation cost over
Yes,
time.
that is. So everyone, please remember, as I said, other and okay, Shreyas, thank you. Then Saurav also answered many times. Let me know, I mean, from others that what is another asset, fixed asset, which never depreciates. Land, the feature is very unique. We cannot depreciate land. The value of land always increases. So we there is no wear and tear of cost of land. Okay, so we cannot consider it We cannot consider depreciation for it. We need not to deduct. Land value remain as it is if we are not going to sell it. Okay. So land minus depreciation we cannot do. And the depreciation on land, we will never find it in our income statement. Never. Okay. So what is another asset? Let me know from you only, which has a similar feature of land which never depreciates, but only appreciates. Okay. So who will answer? Okay, Saurabh, you tell.
Ma'am, goodwill.
Goodwill, yes, very good. So others, please. Again, I am repeating. Goodwill is the same thing. Have you ever, heard of that? Goodwill is depreciating, and you are allocating expenses. Depreciation expense for goodwill. It is over the period. It is going to be expensed. It is going to be depreciated. Never, right? Achha, let me ask another that how and when we record goodwill. Just the concept, not the calculations, because that I have not done in the class. Who wants to answer? When we consider goodwill, when we record goodwill in the account? Anyone? Harsh?
When like we are going to purchase a company.
When we are going to
Buy the company.
buy the company. But is it that only when you are acquiring another company, so the companies that company you are going to acquire, their goodwill is only your goodwill? Are you not generating any goodwill over the years?
No, but it is not considered in the financial statement.
Yes. So it is considered as I told you, the brand valuations and all. These are the voluntary disclosures by the company. I mentioned also few IT companies will find that they disclose goodwill. They made separate statements on brand valuations, human resource valuations, and so. And there are requirements on those disclosures, mandatory requirements, maybe if you are cross-listed in some foreign exchanges. Okay, there are maybe the foreign countries, it is regulated, but not in India so far. Okay. Okay, thank you, Harsh. The next is, so accounting transactions. Now we will move to transaction, how to record the transaction. So what I have told that whenever there is a transaction, money is involved, we need to record it in our financial statement. We need to account for it, and we need to identify two accounts because it is a double entry system, right? So now what business transactions are recorded in the financial accounting system? Exchange of assets and liabilities with other entities. As opposed to executory. Now we will just right after this balance sheet thing, we are going to start the contract act. From the legal aspect, for the legal aspect classes. So there we will do all these executory things. But what is the as opposed to executory transactions? It has to be executed. What does it mean? That supplier is saying I will supply this amount. Customer is saying I will pay. So from at the both end, if it is executory, it is not executed. At least at one end it should be executed, then only you are going to record it. But at the both end, if it is executory, it has not executed, so you are not going to record it. It is not a transaction. It is not a transaction which needs to be recorded. Okay. And how do transactions affect the accounting equation? So that is important thing. So whenever a transaction happens, you just need to see that how it is reflected in your accounting equation. Which account? You know that there are accounts, asset, equity, liability. So how it is going to be reflected in those three accounts, accordingly we'll put, and you will know that in which financial statements it will go, and the balance sheet ultimately should match. Okay. So if it is not matching, that means it is some place you have missed the recording of the transaction. Okay. Okay, now another important concept which is just hold on. So another important concept is accrual basis and cash basis. So we know that accrual basis of accounting, what it is, it follows the matching principle. Yesterday only we were discussing about, say for example, before 31st March, prepaid expense. Remember, prepaid expense, I have paid the money, but the service I am yet to get. That I am yet to get, I mean, when I am getting it after 31st March, after the closing of this particular financial year. So this is called the accrual basis of accounting, when we follow the cash inflow or outflow has happened or not, that is not an issue. But the transaction needs to be, I mean, meant for this particular accounting period. And if it is for next accounting period, we will need to record accordingly. But for cash basis of accounting, it is just the reverse. Whatever may be the, I mean, time period this particular transaction is meant for, but if the cash inflow has happened or cash outflow has happened, then we are going to record it in current accounting period only. So this is cash basis of accounting. And actual basis of accounting, cash may not be there, but accounting period is important. For cash basis of accounting, cash must be, cash transaction must happen, whatever may be the accounting period it is for. So that opposite, I mean, natures of these two basis of accounting you need to remember. Now, income statement follows the accrual basis of accounting, and cash flow statement follows the cash basis of accounting. So that's why income statement and balance sheet is complementary to each other. Why so? Because somebody told me in the initial classes that from income statement we take the profit out and we put it as retained earnings. After distribution of dividend, we put it as retained earnings in the balance sheet. Without that, our balance sheet cannot match. But cash flow statement has nothing to do with the recording of transactions in the income statement and balance sheet. It is a separate statement and it is a checkpoint. Whether the initial cash in the balance sheet, the balance, closing balance of the cash in the balance sheet, whether it is matching with the closing balance of cash in the cash flow statement. So it is a checking point. Okay. Okay. So it is the limitation of cash basis to acknowledge the importance of matching principle. That is what is mentioned in this slide. So let us start with these transactions. Again, please raise your hand. I am asking one by one. So firm issues a rupees 12 million check to an insurance company for insurance premium over the next year. By doing this exercise only, it will be more clear to you. So what are the two accounts affected by this transaction? And what is the nature of those two accounts? Please raise your hand. Yes. Please, I mean, you, Shanmukh, I am reading here. What is your name? I mean, how it is spelled, how it is I mean, pronounced? Huh?
Vardhan.
Vardhan.
Yes, ma'am.
Okay, okay. I didn't find your full name here. Okay, okay, fine. Vardhan. Yes, Vardhan. So
account receivable, and it's a short. I mean.
Yeah. I mean, please slow. Please go slow. Others are also listening, right? Yeah.
Yes, ma'am. Account receivable will be affected.
Accounts receivable. Okay. Then one is accounts receivable. What is the other one? It is a double entry system, A equal to L plus C. For each transaction, you need to match the equation. So if it is receivables, that means asset is increasing. You are recognizing the asset, right? So what is the other effect? Okay. Then I cannot hear you. Please be louder. Who is responding?
Sayam, current capital.
Sanyam. Yeah, so what is the other account?
Capital. Current capital.
The name of the account and then the nature of the account. Okay, Sanyam, thank you. Who else? Saurabh. Saurabh, you tell us.
Expense.
Expense. Okay. Whenever whoever will answer, na, please try to answer the two accounts, because without two accounts, I mean the equation will not match. You need to identify charts of accounts. Remember, charts of accounts. We need to identify two accounts and the nature of the account. Huh? So you are saying expense.
So
Then what
expense
else?
and asset.
Expense and
Asset.
expense and asset. Okay. So now tell me first, what is expense here? And what is asset here?
The money, the check which we are issuing, so that would be expense, and we will in return will get the insurance premium, so that will be our asset.
You are getting the insurance premium. You are giving an insurance premium. Abhijit, I am coming to you later. Divyam.
Okay.
Saurabh, you
Yes,
want
ma'am.
to continue? Saurabh?
No, ma'am, I'll think about it.
Okay. Okay. Divyam?
Ma'am, it should be in
I
revenue
have not
side, right?
said it is expense or asset, or I mean, someone else told something else, or I just forgot. I'm not saying who is correct or who is wrong. I'm just asking.
Ma'am,
Yes,
asset and revenue. Initially,
asset
it would
and
be,
revenue.
yes,
Revenue and asset. So, explain.
because it will be recorded as revenue, and also it is increasing the cash, so it
So,
will be asset.
revenue means sales, right? So, what you are selling here?
We are selling insurance.
No, you are issuing a check. That means you are paying to insurance company for insurance premium. You are not selling.
Okay.
What we do when we do invest in insurance, what we do, we pay insurance premium,
Yes, ma'am.
right? So the
Yes, ma'am.
service we get later on.
Yes, ma'am.
Okay, Divyam, you tried, then Pranav.
Yes, ma'am, the sum which we are paying is an expenditure. Like the check is
Expenditure.
which the company is issuing is an expenditure,
Achha,
and for the
Pranav, can you tell us? I mean, what is the difference between expense and expenditure? Is there any difference?
no, ma'am, according to me, it is not.
It is not.
No,
Mohit,
ma'am.
you want to answer? Is there any
It will be
difference between
prepared
expense and
expense.
expenditure?
Not sure, ma'am.
Vijit,
Yes, ma'am. Expense
what
is
is
a
the
cost that
difference?
is, ma'am, expense is the cost that is incurred to your revenues, and expenditure we are purchasing asset or spending on asset
Yes, so
basically.
expenditure means the capital expenditure, and expense means the revenue expenditure. Expenditure is a long term. It is expenditure, capital, capex, investment, all are, synonyms. Okay, but expense, revenue, expenditure, these are synonyms. Okay. Okay, Pranav. Then what are the two accounts?
Ma'am, the account of the firm and the account of the insurer.
No. From a business perspective, it is your business, right? You are paying insurance premium. So you need to understand what are the two accounts. From your perspective, from your business's perspective, what are the two accounts? A equal to L plus E. Just follow the equation. You know what are the components of A, fixed asset, current asset. What are the components of L, long-term liability, short-term liability. What are the components of E, equity? That means revenue, expenses. Mohit, you answer.
Prepaid expense under current assets and shareholders equity as liability.
Okay. Anyone else? Abhijit, then you, I mean, since none of you have said right, so that's why I have not, I mean, I am continuing asking others also. So, Abhijit, you want to answer?
Yes, ma'am.
Yes.
So this Abhijit Kirtunia, sorry, Abhijit Nandan.
Yes, Abhijit.
So this insurance, as ma'am said, it's going to be part of prepaid expense, which will sit in the current section of balance sheet, and it is to be reflected by decreasing or decreasing the corresponding amount from the income statement or from the equity side, because it will be booked as an expenditure in the income statement. So that's where this transaction is.
Okay, so let me explain now. So I did not find any of you, I mean, has made a correct statement. So maybe some of you has identified one account correctly, but not the other one. None of you has said that this check, when you are issuing, so check means you are issuing, it is a kind of deduction from your bank account, right? So we are issuing check. There is no cash box. It is going from the bank account. So when we say cash balance, so it means both cash and bank balance. Okay. So when I'm issuing check or when I'm paying something in a check or in cash, whatever, it is my cash account is decreasing. Okay, it is a cash. Cash is increasing when I'm receiving something in cash or check, whatever. So it is the most liquid item in the balance sheet. So the highest liquidity the cash has. The importance of having cash is you have that in your hand. So if it is required right now, it is not that you need to wait that when the collection will happen, when my inventory will be converted into sales. You need not to wait. It is there in your hand. So this is the positive. The more and more the cash balance you have, the more liquid is your company. But at the same time, having a huge balance in cash always do not signal that it is very a good, decision. Because holding cash means you are not using it. You could have used it for growth of your business, for a smooth running of operations, for having, hiring for hired, more efficient, skilled employees, right? So, many ways you can utilize your cash. So, having a very good cash balance not necessarily means that you are doing very good. So, it should be a balanced. It should not be very high. It should not be very low, so that your business becomes more risky. So my suggestion is, my advice, whenever a transaction happens, you try to just identify that whether there is a cash account is involved or not. So if there is a cash transaction, it is a cash transaction because cash outflow has happened here. So whenever there is a cash transaction, just blindly you consider that my cash account is increasing or decreasing. And what is cash account? Which account it is? Anyone? Tell me, what is cash account?
Current asset.
Current asset, right? So if there is an effect in the cash account, that means that your current asset is affected. Current asset is increasing if it is a collection, current asset is decreasing if it is a payment. Okay. So one account is very easy to identify. If it is a cash transaction, then just identify, recognize it that one account is cash account, and then see that what is the purpose of that cash. If it is a cash receipt, you have received the cash, for what you have received, identify that account. And if it is a payment of cash, for what that cash has been paid, identify that account. And then it will be very easier to recognize the two accounts and then to see that which side of the equation it is it is reflected on which side of the equation, right? So here cash payment has been made, but not, it is a advance payment has been made. Rightly pointed out by Abhijit and someone else also, that it is an advance payment made. So next year's monthly, say for example, you pay premium, but all together you have paid this accounting year only. So the next year's payment you have made this year. So that means it is prepaid expense or advance payment made. Okay, so if it is an advance payment, it is not your liability. It is insurance company's liability to deliver the service to you. Okay, so that means this comes under also current asset. So one account is cash account here, which is current asset. Another account is also cash account here, which is again current asset. So how the equation is matching? Who will answer? A equal to L plus E. So the both the accounts, one is cash account, one is insurance account, but both are current asset. That means both are asset. So then how the equation will match? Yes,
It would
so
remain
Hari, I
unchanged.
think. Yeah, so Hari. Are you Hari?
Yes, ma'am.
Yeah,
Cash
so
will
tell us.
reduce and accounts receivable will increase. Minus.
Yes. So when you are going to just record at the end of on 31st March, if it is financial year, you are following, then on 31st March, when you are going to record it, how will you record it? Your cash account increases. This means asset increases, current asset, and then prepaid expenses, asset decreases, cash account decreases, and prepaid expense increases. Okay. So asset increases, asset decreases, and look at the accounting equation, A equal to L plus E. The left side increases, the left side decreases. That means the equation matches, right? So this way you need to think. So it will be very clear. There will be no confusion. Just you need to, what is happening, whether it is cash or not, and what is the purpose. Okay. So I think the next transactions will be more easier for you after, doing this one. So then coming to the next one, farm issues a check as a deposit on a custom built machine. Shoham Shreyash. Shoham.
Hello. Yes, ma'am.
Yes.
It will be an asset because.
No, just not only asset. I mean, what asset?
Like it will be a current. Sorry, a long-term asset because the machine will.
Which is what is long-term asset? Which one?
Like if I'm investing on, like I'm issuing a check.
So one is long-term asset. One is long-term asset. Another account?
Short-term asset.
Short-term asset. Just tell me the name of the accounts. Which one is long-term asset? Which one is short-term asset? You will record
that what can be converted to cash like within a span of maybe 1 or 2 years.
No, I'm not asking why it is a long-term asset. I'm just asking the name of the account. Here you are saying one is short-term asset. Which one is short-term asset here? And what is long-term asset here?
I mean, if I'm expending on a on a machine like.
Yes. So machine is what? Machine is?
Like I can take it as a short-term asset because.
Machine is a short-term asset you are trying to say?
It's a long-term asset.
Long-term asset then? And what is a short-term asset? So what is happening with the long-term asset with the machine? What it is? What is happening with long-term asset here? Increasing or decreasing?
It is increasing because.
Increasing, good. And then the short-term asset. What is the short-term asset here?
Short-term asset is my cash share because.
Cash. So what is happening with cash?
That is decreasing because I'm
decreasing.
Using that.
Okay, so that's why the equation is matching or not?
Yes, it's matching.
It is matching, right? So again, long-term asset increasing, short-term asset decreasing. In the previous example, short-term asset increasing, short-term asset decreasing. Here, long-term asset increasing, short-term asset decreasing. The effect is on the left side of the equation. So, but the equation is matching, right? Okay.
Yes.
Next. Next one, thank you, Shoham. The next one, firm buys share in another firm for cash. I mean, in cash only. Please, who will answer? Rishabh. Rishabh, go ahead.
Since the two accounts here are first is the short-term asset, the cash, and the next will be
Yeah, so it is very, as Rishabh said, just first just recognize that cash is involved or not. Okay, cash is involved. Then payment has been done now only. It is not due. So that means cash is there. And when cash is there, so very quickly you recognize that it is your current asset. Okay. Yes, Rishabh. Then cash. Then next.
cash is
Cash
exchanged.
is what? Cash is increasing or decreasing? I mean,
Decreasing.
decreasing. Okay.
Then since shares are bought, they might be a part of long-term investment or short-term investment. So the it might be current asset or non-current asset, and it would be increasing.
Okay. So it can be current asset or non-current asset, right? Anyone else? So one is cash. I mean, that is for sure. I mean, we have identified cash is decreasing because payment has been done. So who else? Buying shares in another firm, whether it's current or fixed. Yes, Reyash?
Ma'am, the current cash account will decrease and the long-term asset will increase.
Yes, thank you, Shreya. So it is long-term asset. When we buy share, not with the, goal that with the objective that we are going to sell it very soon. Also, it is not related to our day-to-day operations. Okay, so it is a long-term investment.
Hello, ma'am.
Yeah, just a minute. Yeah.
I have a question.
Yes.
Ma'am, let's say a firm whose primary business is not financial trading as such, even though it is not mentioned in this question, but just say that the finance department has a small investment division. So if they do trade regularly, so in that case, I think it should be a short term.
So that's why I told that if it is under operation, if it is a part of their operations, always it can be. Okay.
But ma'am, since this question does not mention whether
so you need to clarify, you need to tell your assumption. Okay.
Yeah, so I think probably Rishabh's answer was more appropriate. I feel that.
I mean, then you need to answer it that way, because when we talk about investing in another firm, so that means it is an investment term used itself. Just hold on, please. Okay, sorry. Okay, so now another thing, because it may not be very clear to all of you. So whenever we talk about share, you may think that share means it will go to equity. So when I am buying share of another company, so we are making, and which is not our operation. Our operation is not buying and selling of shares. Okay. So that means we are making some investment. We are not keeping our, as I said, that keeping your cash idle, not using your profit. So, and you are not finding also some opportunity which is related to the growth of your venture. So what you can do, you can invest it somewhere. We do it in our personal life also, right? We invest in somewhere, we get the return and we use it in future. So this buying shares when happens, So it has nothing to do with your equity. Equity means you are owing something to your shareholders. You mean the business again, right? And buying shares means you are making investment, you are owning. You are the owner, the business is the owner, the business has the ownership. But on equity, the business does not have the ownership. Ownership is of someone else. The business owes something to them, to the shareholders. That is the difference, right? So buying shares or selling shares, both the terms are different. Okay. Okay. The next one, farm acquires chemicals to be used as raw materials. Who will answer? Shreyash again? No one else? Himanshu, yes. This name I'm hearing first time. So Himanshu?
Yes, ma'am. Ma'am, the raw materials will be a part of the inventory, so they are a current asset. So they'll be added to the current asset, and the current asset will increase. While the company will be, the firm will be losing its cash, and there will be deduction in the
Yes.
current asset.
Yes, good. Okay, I think they does not need any more explanation. Okay, the next one. Well-known scientist is hired to manage the R&D function. Employment starts next month. Praveen. Sanyam, please wait, okay? Let others also respond. Or Devendra, what is your name? Devendra.
Yes, ma'am, Devendra.
Okay, Devendra, yeah.
Ma'am, the liability will be the 480K because we are going to pay him. And our asset will increase because
Asset and liability. What is the asset? What is the liability?
asset is fixed asset because we will means it will be for a greater than 1 year period, and we need to pay him in future, so it will be liability.
Anyone else? Yes, Prerna?
Ma'am, there is no transaction happening right now, so we are not recording anything.
Yes, Devendra, Prerna is correct. Okay, so it is executory in nature. See here, 480K a year, you are promising, but you are not paying now. So it would have been a liability if it is, I mean, if already an asset and an asset got generated, okay, but it has, the asset has yet, I mean, asset is yet to be generated. Why so? Because employment also starts next month and payment also will be made next year onward. So that means what? That means both are executory in nature. It is executory in nature at both ends. At least at one end, if it is executed, then we can say that, okay, I mean, this is there is a recognition of something, but it is not. So it is executory at both ends. So there will be no recording of transaction here. Okay. Okay, next. The farm receives an order. Yes, Shreyash?
Yes, ma'am. Ma'am, so when the order is received, so we will receive the cash as well. So our current cash account will increase, but we have to deliver the product, so our liability will also increase.
So here again, I mean, I want to tell you that, I mean, there is a principle, accounting standard, which is revenue recognition principle. Okay, so when you are going to recognize it as revenue, it should follow that particular accounting standard. And also there is a, opportunity to apply your discretion also. So when we calculate the earnings management, as I mentioned earlier also, what you are going to recognize as earnings. In some places, you can apply your discretion. So that discretion you may apply in recognition of revenue over and above the accounting standard. And there are specific accounting standards also, but you can make your own policy also based on those standards. So you will find that when the goods or services, goods especially, I mean, when at what time you are getting when you are going to recognize it as revenue when there is a clear assurance that the sales has been made, the sales has been completed. There is a contract already done. Okay, so if the contract is there, the sales, sometimes it is like, when the goods are shipped, then you are going to recognize it as your revenue. When the goods are delivered, then you are going to recognize it as revenue. So there are different laws and standards which you need to follow before recognition. So if it is as a verbal order, there is no contract made that yes, I want this amount of product. If it is a verbal order, no formal contract made, it does not follow, it is not yet shipped, you cannot recognize it as a revenue, right? Because, again, it is executory in nature, right? So it needs to be specified that this order means the sales has already happened or not. Then only you can recognize it as your sales, as your revenue. Otherwise, not. Okay?
Ma'am, but when the order is placed, then we receive some money for
Yeah,
that order.
you are assuming, but you will find that in many places, this statement, why I am explaining, because this particular statement does not guarantee of that it has been, that is the language of accounting, right? So that's why I am just letting you know that is the language. So this language does not always signify that sales has happened. Okay?
Yeah,
But it is very, if you just simply you read this sentence, it looks like yes, order received means a formal contract has been made, there is a guarantee that the sales, the goods are going to be shipped, and that's why I should recognize it. But this statement, as I am telling you, without having those information, we cannot say that this means that the sales have been made. We need additional information. Okay.
Yeah, okay, ma'am.
Okay. So the next one, farm receives notice from us. This is for this particular transaction only. That's why I did not ask you all. I only explained. Huh? A farm receives notice from a supplier that it has shipped raw materials. The farm has the title of to the goods while in transit. So see the difference between this transaction and the previous transaction. It has shipped. The title to the goods in transit is with the farm. So see how definite it is now. Okay. So who will answer? Yes, Devendra, you please try once more.
Ma'am, as we have the ownership of the goods, so
Yes,
our
yes,
asset is
yes.
increased,
Mm-hmm.
and we still need to pay the money yet, so our liability will also increase.
Yeah, which asset, which liability?
Depends on goods, so it may be fixed or current asset.
Anyone else? Devendra is partly correct. Bhavik.
So it will be in the current assets because it's a raw material, and in the liability section it will be account payable.
Yes, true. Thank you, Bhavik. So, Devendra, you just understand that when it is about raw material, so that means we are going to use it for our production purpose, right? So, it has to do with our operation only, and its life is very short. So, that means it is our current asset. And since we are yet to pay, so that means it is our current liability. So, rightly, pointed out by Bhavik. And how is the accounting equation gets affected, Bhavik?
So the current asset sides will increase, and
So asset will increase and A equal to
liability will
L plus A,
increase.
liability will increase. So the left side and the right side of the equation matches, so the balance sheet matches, okay? So I am spending too much time in these small things, but it is very important to clear the basics, and then later on we will, move fast, okay? So I am stopping here only today, and let me take the attendance.
Ma'am, please share the slides.
Yeah, I will share the slides. Another thing is the way you have responded. Just remember that I mean the whole group of whoever has responded, their groups are going to be evaluated. With the same marks or so. Okay. Okay. Thank you. You may leave now.